This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Hello and welcome to the Research Talks, the last Research Talks podcast here on Stockbox before Christmas. It's Christmas Eve and this podcast will be going out on Monday, so I think the markets are open. Alan, on Monday?
The markets aren't open Monday, Mark. They're closed Monday and Tuesday because their bank holidays. It's in lieu of Christmas.
So it'll be Wednesday that we can get our fix.
That's right. Wednesday we can get our fix back in the markets again. So
yes, okay.
But yes, I've just had an alert pop up. Go pick up the turkey. So there you go. So,
oh gosh, you've got to go and pick up your turkey. I think all of our food is in. My dad is very good at getting that organised with the butchers. We've got a big rib of beef as usual for our Christmas dinner, and I'm sat in the conservatory here because I am actually mobile back in the UK visiting my parents and with the Christmas tree, and it's very festive here, lots of presents under the tree, so I hope you have a similar scene.
It's very much so. I'm in the office at the front of the house with the door closed, but as soon as I walk out the wood burners going and
nice.
the Christmas trees aglow, as it were. So it's a lovely festive scene. All we're missing is snow on the ground, but there we go.
Well, it's a lot to ask for these days, isn't it?
It is, yeah with global warming.
The only thing, you can fly to Russia, my wife is Russian, so that, if you want guaranteed snow and guaranteed absolutely sub-zero temperatures, then Russia's your place to go for winter.
Yep, indeed, yeah.
But so today we're going to be having a kind of a bit of a review of the year, aren't we? And also our top picks. And I remember we did this last year, Alan, in the same situation. I was in this conservatory talking to you about our top picks. And let me remind you of our top picks, and then we can discuss how they performed over the year. So for me, it was Red Rock Resources, Conroy Gold, and Panther Metals. And for you, it was ECR Minerals, Power Metal Resources, and Cadence. So I can tell you that Red Rock Resources is down 60% on the year. Conroy Gold is up 8.5% on the year, and Panther is actually down 14%. So I did the maths. If you put £1,000 into each, or £3,000, if you went with my topics, you'd have £2,345. Okay, so it's not ideal. So ECR from you is down 70% on the year. Power down 50, which is a surprise actually, and Cadence is up 30 or 28% to 30. So, but if we'd gone with you and you'd had the same thing, £1,000 in each, £3,000, then it'd be worth £2,080 today. So both of us probably not good to listen to for stock picks.
But yes, why are we doing this, Mark?
I'm not entirely sure. But I mean, well, power was a big surprise for me because with everything that's going on there, I'm surprised it's down. But it's just the way the market is. And I mean, again, Conroy, I think it's purely because that joint venture took so long. I mean, we're only really here where we are because the EGM was only, I think, yesterday or the day before, the 22nd. And they've actually signed that. They've approved it. So they've now just literally got to sign the dotted line and get that joint venture. And then I think £1 million or €1 million immediately lands. And I think it's a €10 million investment over the course of the joint venture. So, they are now in a significant transformative place. So I would again pick Conroy for 2022. And hopefully it's better than 8.5% on the year. But how do you feel that year's been generally, Alan?
Well, it has been. It's been death by a thousand cuts, hasn't it? Really, since May. Things were going, I think, well for most companies in our in our world, as it were, certainly the companies that we discuss regularly. But of course, since that time, we've had the toxic combination of uncertainty over Brexit's impact on the UK economy and the UK markets, and also, of course, the impact of COVID, the end of the furlough scheme, and of course the ongoing issues that we're still having with the Omicron variant today. So that's resulted in most companies really flatlining, well, not even flatlining, just a gentle slope downhill, really, since May this year. And of course, Power Metal have discussed on many occasions, and that is still going to be a pick of mine for the coming year, quite simply on the basis that there are so many different projects set to come to fruition, so many IPOs scheduled, that I think it's going to be an incredibly busy and transformative year for the team. Plus, as well, we're seeing in other markets the impact and some of the losses on resource and commodity stocks hasn't been so great. I think the attitudes of investors on the TSX market in Canada and the ASX market in Australia are a little more bullish. Just as with technologies and pharma stocks, say, you'll find a much higher valuation on the Nasdaq, say, than you would on AIM. So you have to take those factors into consideration. But there's an old saying in the markets, of course, the markets can remain irrational for longer than you can remain solvent, and that is a very apt and appropriate warning. But I certainly haven't sold any of the companies that I've absorbed losses on this year. In fact, I've used some of the falls to actually top up and buy into the companies. And I'm still waiting for that turnaround. But I think the underlying criteria for selecting the stock in the first place remains as strong, if not stronger than ever. Certainly in the case of Power Metal, they've acquired further projects this year. They developed those projects. They're bringing gold metal resources, of course, to IPO. They've raised the first tranche of money, and of course that will go onto the balance sheet of Power Metal as a major shareholder, and that's a key factor in bringing greater value into a business as you go forward, and that's also, of course, been repeated. We've spoken about Open Orphan and their spin-off IPO, Poolbeg Pharma, earlier in the summer. The same thing will happen there. So, Poolbeg's obviously come to market already. Again, it's not really performed as a stock since the IPO, but certainly they've made they've made tangible progress as a company, and have taken the business quite some way since the IPO. But the markets simply have the overarching macro factors in the market, I think, have served to outweigh the individual successes of the companies themselves. Although, of course, we have seen on quite a few occasions where major company-changing events occur within the company, such as Conroy. Of course, you mentioned Conroy just now. That deal signed. There has been a huge uplift. The shares rocketed from 20p, I think, up to 45p, and I think they look set to go higher because there's huge value there, and that's it's something that is very near term, as a project in development, and those are key factors for sure.
Yeah, well, it's 16 million market cap at the moment, or as of yesterday when I did my checks, Conroy Gold. So the deal with Demir is fantastic, though. I mean, you've got a very it's a Fortune 500 company, I think, in Turkey. It's great that they've done that. So I really think that 2022 could be I think it will be a very, very good year for Conroy Gold. So I am very much looking forward to that. It's not going to take much, is it, to get to the sort of 30 million, is it really? I don't think. And then
well, it's not, because that market cap is comparable, say, to I think Power Metal is about 20 million currently, and of course you've got ECR Minerals, which has come all the way down too, and obviously ECR, I think, is a completely separate case, given the very sad death of Craig Brown back in October. But all of these factors, because when you compare what Conroy has, it's got a major gold investor come in. The money's already coming into the company, so they can fast track the development at the Longford Down Massif and build a gold mine effectively. That's the exciting thing. So 15 million market cap is absolutely nothing at all. So I think the stock is really set to have a very strong 2022, and I do expect, because the underlying the underlying rationale behind buying into commodities is unchanged. You've got Joe Biden and his 1.9 trillion infrastructure budget, which is going to hoover up iron ore and other basic commodities like no tomorrow. You've got China, a resurgent China and Chinese economy, the world's biggest consumer of raw materials and commodities. You've got the EV industry that is set for a supply squeeze on the lithium front. It's well documented at mid 2022. You've got the demand for copper to supply that too. Rare earths, of course, which make up an integral part of the EV industry, and also, of course, the clean technology industry too, which is, of course, wind turbines and other means of generating clean energy, and so many other factors within the mix there too. The underlying rationale is compelling, and I think we are going to see a resurgence in the first half of next year.
Yeah, I agree. I think certainly companies that are in the green or the clean energy space, the green economy or the clean economy, the clean energy space, are going to do very well. I think we're going to see a lot more IPOs and companies moving into that space. Rare earths as well, of course, but also, you're right, battery metals. There is going to be, I think, a big supply squeeze next year. So any company that's in lithium, cobalt, nickel, manganese, I think they're going to do pretty well. So on the rare earths front, one of my picks, I would say, for next year is Altona rare earths. I know we've spoken about Altona before.
I'm a shareholder.
Yeah, good. 3.5 million market cap at the moment. It's stagnant. It's waiting to transition over to the main market, which I think will happen early January. With three rare earth projects, and they've got what are the different versions of rare earths? You've got ionic clay, haven't you? Is that right? And
yep. That's right. Yeah. Well, there's the Monte Moambi rare earth project, which, of course, it's a former fluorspar project. And whilst the previous work was done at the project, some drilling was done. Of course, through the drilling, rare earths were identified. And Cedric Simonet, who is now on the board there, of course, has worked that project for many years, and he's been brought in because of his expertise and deep knowledge of the project. So and what I also like about Altona is the selection process that they've gone through. They've had a number of projects on the table, but they've undertaken incredibly detailed due diligence to make sure to consider the project from every angle: the environment, the incumbent government, how benign the incumbent administration is, routes to market, all of those factors to consider, and then, of course, the actual what's actually in the ground, how easy it is to get out, the capex required, all of that stuff, and I think Christian Taylor Wilkinson and his team have done a very good job there. And I'm sure when it transitions over, we're going to see a big uplift in valuation because of the additional exposure that they'll receive.
Yeah, exactly. But it's worth practically nothing at the minute, and that's what really attracts me, because it doesn't take, when you find the real small market cap ones, it doesn't take a lot to get them to double or even triple, and then sort of on from there. So that's what I like. That's what really does attract me to Altona Earth. It's just how low, how undervalued it is right now, and really unrecognized. But I'm sure that will change. As we've said before, there are not many rare earth companies you can actually invest in on the London market. So Altona will be adding to, I think you can count them on one hand, actually, the number of rare earth project companies. So looking forward to Altona. And on the green, clean energy side, Sabian Technology is something I've also had my eye on, which again is valued at only 4 million at the moment. It's a company that was recently refinanced and restructured. It has a legacy project. It's all to do with decarbonisation and the circular economy. And the original project they had was to do with boilers, and it was like load optimization using technology to make boilers more efficient in terms of sort of dry firing and that kind of thing. So it's like almost like smart heating, I suppose you could say. And they've worked with the NHS, for example, and they've had they've seen some significant cost savings when they've implemented the technology. But there's their sort of cloud service which links into that, which is giving data analysis and visibility on efficiency and control. And it's I guess it's almost making things that require energy and produce carbon to give visibility on it and see where savings can be made, but also as well to give real-time data, because carbon credits, I think we're moving into this low carbon economy. That's going to be a big thing as well.
It is,
and if you can prove that through hard data, that's going to be really valuable for you in the future. But they're into a few different things. They've got that. They've got a project with City Oil Field, which is the thermal degradation of mixed plastic waste into fuel oil. So it's actually taking waste plastics and degrading them into oil for fuel. So what a great way to so it goes further than recycling. It's this kind of circular economy idea, actually turning it into a useful product, which would be, I think that's fantastic.
I attended a presentation from Sabian Tech a few years ago. I met the team there, and certainly the idea with the smart boilers, I think it's really good. And it's really, they're really buying into the whole drive behind the COP26 conference recently in Glasgow. The aiming for net zero economy, and a carbon neutral production cycle, as you say, that circular economy.
Yeah. No, I think it's they're going to be. I'm hoping they're going to really start picking up what they're doing and getting out and telling the story a bit more, because, as I say, the green, clean economy is going to be very big going forward. And I think they're into like hydrogen, like low cost hydrogen as well from old oil wells, actually. Yeah, existing oil fields, and using a process. I think it involves pumping oxygen down, and you can then extract hydrogen from it, because we all know that's a very intensive process to create hydrogen. So they've got a lot of different things going on. So I'm hoping they can really start to sort of tell that message in the next year. And that'll be the first green tech that I'm invested in. So, but I think it could be a start. I think next year could really see the start of that kind of sector come into life, really.
Yeah, well, certainly. Well, that's one of my picks too. Of course, we spoke about this company a few weeks ago on the circular economy front, and I spoke about Technology Minerals. TM1, of course, is the EPIC code, and this is a company. It's headed up by Robin Brundle, the chairman, who's well known in the automotive and motorsports world. Of course, his brother is Martin Brundle. You've got Alex Stanbury, who's the chief executive, who's some 15 years experience working in the mining sector, and this company have created a circular economy model for the battery metals industry. They've got they've got a number of projects in the USA, in Spain, Cameroon, and also Leinster in Ireland. And these are licenses that are prospective for cobalt, nickel, copper, lithium, and they're worth that they've attributed a value of some 20 million to the projects where they are at the moment, and the projects are all relatively early stage, but they've the company also has a 50% stake in a company called Recyclus. And Recyclus is the first company to set out a blueprint, if you like, for recycling batteries that have been used in EVs and also lead acid batteries, and recycling those components back into the production cycle. So they can take, for instance, that they have secure transportation boxes into which these batteries are loaded. They're then taken, they're broken down into their component parts and recycled, and then the metals are are recycled into what's referred to as a black mass, and that's then resold into the production process. So it's a full circular economy company. They've already done the first deal with Slicker Recycling. They were at the London EV show last week, just explaining the process, and they've got something which really is closely aligned to a company like Tesla, for example, in its production cycle. They've got a blueprint now for companies like Tesla to become carbon neutral and to tick all of those important boxes on the way. So they have a full life cycle for use of batteries and recycling of batteries. And this is so important going forward. The company's got, I think, 4 or 5 deals already lined up. These are partnership deals lined up for 2022, and indeed the numbers the company put out when it IPO'd have changed. They expect to be further ahead along the revenue the revenue and production cycle than they are currently. So very exciting time for the business, and I think 2022 is going to be a very big year for them.
Good, excellent. And what about Cadence then? I know that did well, 30% up. Is that something that you're still hopeful for further growth next year as well, Alan?
Yeah, well, Cadence are on the verge of completing the key first stage of the IMAPA investment. So they announced a few weeks ago that they have taken the IMAPA mine effectively out of administration. They've agreed a deal with the local government there, the company that own the mine, Dev Mineração. They've agreed a deal to basically buy it out of administration, but they've had to secure certain concessions from the government, and in order to be able to operate the railway, to bring the mine back to life, and also to ship the piles of iron ore that are at the mine dock in Santana. That's all been done. They have started shipping, and they're generating revenue from shipping the iron ore. The final hurdle to overcome is an agreement with the banks, and of course the banks will have lost money on this. They've got the lenders are in 3 different time zones, so it's taken a long time to put this particular part to bed. But a couple of weeks ago, they announced that they'd had credit committee approval from all the banks to agree to this deal, and now it's just a question of getting the deal signed and done. And I believe that's very close. And I think once that happens, then Cadence, as you say, has done well on the year. On the back of the IMAPA project. I mean, the company's got a market cap of some 28 million at the moment. But once it completes this deal, Cadence Minerals will own 20% of a mine, the railway, and the port, and that was valued by Anglo American when it owned it back in 2012 at $600 million. So, there's this is just one of the investments that Cadence is involved in. Of course, it has a 9% stake in the Sinovac lithium project owned by European Metals Holdings. It's got a stake in the Sonora lithium project in Mexico through a joint venture, Yangibana rare earths project in Australia, and also it has some hard rock lithium assets in Australia as well. So and that's for a combined market cap of just 28 million. So I think when the banks sign off on the IMAPA deal, and that, as I believe, is imminent, once that happens, we are going to see an explosion in the share price, because it's massively undervalued given everything that the company has on the books.
Okay, that's good to hear. Well, I'm actually going to have. I know we had 3 picks last year, and I'm going to actually put a 4th on it. And it is, again, it's the same as last year. It's Panther Metals. I know it's down about 14% on the year, but compared to others, that's not too bad. But what I like, go on.
Darren's done a great job.
Darren's done a great job.
Yeah, he really has.
He really has. I mean, it really has. It's a completely. Well, it's not a completely different company, but you can clearly see the work that's gone in over this year, and how things are now set up, with the Australia listing being successful and now looking after itself. and really the focus being solely on Canada. And Darren said in a recent interview that it's I think he said he's targeting multiple discoveries in 2022. So again, it's a year of exploration, and hopefully, you can never guarantee it, but hopefully discovery as well with Panther Metals. So looking forward to really following what's going on the ground in Canada. And hopefully, across their multiple projects over there, and all the pre-work that's been done, that they can get some good drill results coming up, because it only takes one, doesn't it, as we know, and
it does
completely transforms a company. So Panther at 8 million, done very well this year. Well, as a company, the work that Darren's done this year has been clear. So setting up for, I hope, what's going to be a year of discovery for Panther Metals. So that would be my other pick there, Alan.
Mm-hmm. Okay. Well. I mean, staying in the same sector, of course, I'm going to pick Power Metal Resources again. I think I've already said this, but given the sheer range of projects the company has, of course, we've got the Gold Metal Resources project in the States, which is being spun off separately. So that is going to bring a great deal of value alone onto the Power Metal balance sheet when it takes place. We have the new Ballarat Gold Corporation in Australia, which is the Red Rock Resources joint venture, and of course that's taken up an awful lot of territory in the Victoria Goldfields, and they're actively working there and discovering lots as they progress with that. We then have the FDR project, which is in Western Australia in the Patterson province, and that includes a potential gold copper project and of course a uranium project. Uranium is very hot at the moment, but Power Metal described finding a magnetic bullseye in the Patterson region, similar to the magnetic bullseye which was first discovered by Great and Cole when they discovered the Haverian prospect down there. Of course, everyone knows what happened then. We then come to Botswana. We have the Malopo Farmers Project in Botswana. We've got the Kalahari Copperbelt project, also in Botswana, the Tati project, and a raft of other joint ventures in Africa. Of course, we had the Tanzania venture with Katoro Gold, the Haneti project, of course, and many others in that region. We then come across to Canada. We've got the Silver Peak project, which will also be the subject of a separate IPO at some point, and the Athabasca uranium project, and also going back to the USA, of course, we've got the Alamo gold project too, which all of these are progressing. There's news on these. I mean, Power Metal, as we know, is just a news machine. It's constantly churning out news and developments, and yet all of those projects owned mostly by Power Metal or solid joint ventures, if not, add up to a total of 19 million. I mean, it's absurd. It would just take one project to come to fruition, and that market cap would be dwarfed by the value of that one discovery. So that's why I'm still a shareholder. I took part in the recent placing at 1.7p, and that to me was absolute no-brainer, slam dunk value. So where we are now is even better at 1.34p. But I'm here for the long term with Power Metal. So there we go.
Yeah, no, I agree. And as I said at the start, I'm surprised it's really down sort of 50% on the year, but it's just, it is what it is. It's the way the markets have been.
It's where the markets are, yeah.
So,
yeah, exactly.
It doesn't change anything at all with the company and the work that Paul Johnson is doing. And as you say, multiple IPOs already set up and in the works. So, yeah, I think another very busy year for Power Metal Resources, building on the story there. So, go on.
Oh, just to say as well, one of the joint venture partners with Power Metal, of course, is in the KCB and Malopo Farmers Project in Botswana, and that's of course Kavango Resources. And exactly. Kavango had a fantastic year too. I mean, they really have powered ahead. And had that been a pick last year, I think we'd be in clover in our respective portfolios, Mark. But nonetheless, I think. Kavango has the Malopo Farms joint venture. Kalahari Copperbelt joint venture, and of course the LVR Geo Explorers joint venture. But certainly the jewel in the Kavango crown is the KSZ, the Kalahari Suture Zone, which from modelling and all of the exploration work which has been done over years and years, and indeed one of the geologists, Jeremy Brett, who works there, was working on the project in the 90s, and they believe there's a huge asset that lies underground there, which is comparable to the Norilsk mine in Siberia, which produces 90% of Russia's nickel. So it's just a vast area, and they've just undertaken a drilling campaign there, and the latest drilling campaign has revealed some really exciting news on a magnetic reflection that's come back, and could lead to the find that they're hoping to find. So it's really exciting, and I think Kavango are set for a stratospheric year too.
Yeah, actually, it's a good point you bring up, actually, and I do like Ben Turney in the way he's very good at also articulating the story. There's a lot of data that is produced, a lot of images as well, but he's very good at coming on and explaining exactly what it means. He does the live Twitter spaces as well, as well as interviews, so... He's I like Ben, and you're right. They are setting up for potentially a big discovery there at the KSZ, and then of course they've got the KCB shortly after. So it's interesting. Go on.
I think with these discoveries, you just hit the nail on the head. It's when we're talking about a mining company, and years ago it used to be a bit of 4x2 hammered into the ground, and there was a picture at the presentation. That was it. But of course, with the modelling now, you can really model these things extensively, and I think what Ben's done very well. He's used those. It's the old story: a picture paints 1,000 words, and when you've got detailed imaging like that, you can really get an understanding of what they're doing, the process they're going through to confirm that what's in the ground is actually as the model has shown, and I think that's the exciting thing. What we're seeing is as they drill further and further, we're seeing the model actually come to life. If it's as big as they think it is, I mean, this thing is going to be humongous.
Yeah, absolutely. Okay, any others then, Alan? The only one I can...
Yes.
Go on.
Yeah, well, I've got another technology stock, and again, we spoke about Bidstack a few weeks ago, but Bidstack has had a fairly torrid couple of years, really, simply because the process the company has gone through to get to the deal that it announced the other week has been it's been an exhaustive process, I think, fair to say. But the Bidstack, just in simple layman's terms, it has an advertising platform that appears across gaming platforms and also mobile gaming platforms, enabling and of course we know gaming is a huge fast-growing industry. We've all seen what's happened in esports. And the global marketplace is reckoned to be about $260 billion by 2025. Some 3.5 billion gamers worldwide, and it's just growing exponentially. So of course, advertisers want to reach that market, and Bidstack has developed a proprietary platform and technology to not only reach that market but also to deliver detailed ROI back to investors. But it's gone through a lot of testing. And the company had some communication issues where it spoke about future revenues a couple of years ago, and it didn't hit those revenues. Of course, certain websites, which will remain nameless, took it as a cue to get their teeth in and to conduct character assassinations on the management and the team there. And a lot of investors became very disillusioned. But they've continued. They've continued to work hard to develop it. They raised 11 million sterling back in the summer to continue to develop, and finally they announced in December a deal with the leading AAA games publisher, which hasn't been named, but everyone thinks it's EA Sports. It's a multi-year, multi-ad format, multi-million dollar deal. This gives them exclusivity across the gaming companies, sporting franchises. and the CEO James Draper has now very much toned down his wording. Whereas he was very bullish a couple of years ago, he's very cautious in what he says now. So on the announcement, he said this materially expands Bidstack's addressable audience, and it's been years in the making. So this is the deal really that they were probably talking about a couple of years ago, and they've tested everything through all of the major advertising names, of course, including Dentsu, WPP, Publicis, Omnicom, Interpublic, Accenture. It's been thoroughly tested, so the deal's been done. Shortly after that, they announced another deal with Azerion, one of the largest programmatic in-game ad deals to date. Again, further expands the footprint. Now, the shares in Bidstack shot up. It was announced a couple of Fridays ago, and Bidstack shares literally doubled in the afternoon, still giving the company a fairly modest market cap of about 38 million. Now, we mentioned earlier what these companies would do on other markets. If this were NASDAQ, you'd be probably talking about a company valued at a quarter of $1 billion already. But that's the UK market for you. Nonetheless, the company has a 30 million market cap, shares trading currently at 3.4p, and that's up from, it popped up to 4.2p briefly after the news. So I fully expect Bidstack to continue to announce further deals next year, and I think this could get back to the highs it was at, possibly even higher than the 15p highs it was at the start of last year.
I think that's a good pick, Alan. Yeah, I think that's going to do pretty well. And I know you haven't. It's not been mentioned, but yeah, if it is EA Sports, and super. That's awesome. So I think that's certainly a good pick. So how many have you picked then? I know we picked 3 last year, but I'm going to go for 5, right? I don't know how many I've got 4 written down for you, but I'll go through my 5. So I'm choosing Conroy Gold, Panther Metals, Altona, Sabian, and I'm actually going to steal Kavango as well that you mentioned, because I do think that could have a good year. I mean, Metal NRG is in my mind as well, but I think we've got to see where that goes with some of the recent things that have gone on there. But it is very cheap, so from that point of view. But and again, they've got a bit of a green play going on. But yeah, that's one that's sort of there as well in the background. But those are my main 5. And from you, I've got TM1, Power Metal Resources, and Bidstack. Was Cadence one of yours as well? Were you going to say? Or?
Yeah. Well, Cadence, I think we're imminent with we're imminent with this with the Amapa deal being signed, and Cadence, I think, will want to progress because they'll have a 20% stake. They want to progress to the 27% stake pretty shortly after that, and they then have first right refusal to go to 49%. So of course, if they do that, that some of that money will be funded from the sale of the iron ore tailings. Excuse me. But after that, of course, it will mean they'll have a massive stake in a mine and infrastructure that was worth $600 million back in 2012.
Okay. And did you want a 5th, Alan, or?
Yes. Yeah. I wanted to. Well, in fact, I'm going to pick. There are 2 companies that I think are massively undervalued. One is Coincidium.
Okay.
So Coincidium, of course, we've spoken about on many occasions, and this is a company that's in the DeFi NFT space. They have just announced, or they announced a few weeks ago that they had started to test or beta test their NFT marketplace platform. And when we've spoken to Malcolm in the past, of course, Malcolm Palais, the chairman, and Eddie Travier, the CEO, they've always talked about providing a platform that will become the picks and shovels for the NFT industry going forward. And what they've created is something for brands. So brands like Gucci, brands like Glenlivet Whiskey, all of those, they can then create a white label platform for themselves and sell NFTs. So in other words, the Nifty Labs joint venture, the NFT marketplace that's been built, it'll be a conduit for all these companies to be able to create an NFT platform to sell NFTs to their fans and their followers. And it's a great idea. I think rather than go out there and just create something that you're competing directly with OpenSea with, to provide something like this is a far better way to go about it. Also, there was a little event a few weeks ago that I think shareholders might have missed. I mean, the shares are currently trading at 5p, so it gives the company a market cap of about 8.5 million, which is derisory considering the space they're in. They have about $3.5 million in crypto in the reserves. That's various cryptocurrencies, including Bitcoin and Ethereum and various other tokens. But there was an announcement a couple of weeks ago where the company announced that a strategic investor had bought treasury shares in the company at 10p. Now, I happen to believe this is quite significant, and I think it could form part of the backbone to some projects that the company will hopefully bring to market next year. So that I believe is highly significant. It will make a material difference to the company as they go forward. The company also has, of course, investments into the DeFi banking company GreenGage, and we'll hear more about that next year too. But again, along with the malaise in the sector, the shares have slipped backwards. But I think, if you want a benchmark valuation, the fact that strategic investor came in and bought the treasury shares at 10p, that says an awful lot about the potential in the company and revenue expectations for the coming year.
Okay, excellent. So we've got a crypto one in there at the end as well. Which is good. So, okay, so there we are. We have 5 each. So in 12 months' time, Alan, we can see where we both are. Okay.
We can look back and see how much our respective portfolios are worth. Yes.
Indeed. Well, look, it's been fantastic. I know we do these every week with you on Stockbox here, and here we are at the end of the year, pretty much at Christmas time. So thank you very much, Alan, for your time throughout the year. Wish you a very Merry Christmas. I hope everything is good with the family, and of course, the current coronavirus that is running around. Hope it doesn't affect you or your plans too much. Have a wonderful Christmas, and I'll speak to you again. Maybe before the end of the year, but certainly in 2022.
Thank you, Mark. It's been great being here during the year with you. We've shared some fascinating stories. Just remains for me to say, have a peaceful, prosperous and safe 2022. Meanwhile, a Merry Christmas to everyone.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.